To remain updated with the latest business news, click on the bell icon.
Markets, are keenly eyeing this budget. Everybody wants to know whether we're going to continue to see the kind of momentum that has built up. And even in the economic survey, the government highlighting the kind of wealth generation through IPOs, preferential issues, and the kind of momentum that stock markets have seen like never before. What's required in order for us to see that continue this time around, despite the global backdrop?
Great question. I think it's going to be very difficult for the Indian markets to continue to rally given the global backdrop, just based on the budget. So the budget will have obviously some positive or negative short-term impact, but then it'll become business as usual for the markets, and we will start focusing on all the things that we normally focus on: what's happening to growth, what's happening to valuations, interest rates, inflation. So I think one of the things that I would like to see is that the budget is not inflationary. So some bit of incentives more for the PLI schemes, etc., because that's proven to be quite successful. I think we really need to keep addressing the supply side bottlenecks, especially due to COVID as well, and to have more production in India. So I think that's going to be important, and also to make sure that our fiscal deficit numbers don't grow, rather they show directionally a consolidation. Otherwise, our real interest rates are negative, and we do need to see that our interest rates don't have to go up sharply. I think those are the two things that I think are going to be important from a market perspective. Of course, growth is always the focus, and I expect the budget to be growth oriented given the forecasts that they've made for the next few years. So the other two factors I think are going to be important.
You touched upon inflation, Punita, and there was already a slight warning with regards to imported inflation, talking about oil remaining between 70-75. That's a safe zone as of now. Do you think that's realistic?
Well, I do think that, it's hard to predict what oil prices are going to do, but I think given what the commodities have done last year, oil has potential to go up, especially in the wake of some of the geopolitical issues that the world is facing. In those kind of situations, typically oil can go up, and if oil does go up, that's all the more reason that the budget factors that in appropriately and doesn't see more inflationary or higher deficit numbers, and that the growth numbers are appropriately managed.
What would you like to see in order to ensure that that the needle moves ahead now going forward?
Two important things that I think we need to focus on. The organized sector is obviously showing great resilience, and I'm on boards of lots of companies, but there too we are seeing some headwinds. The headwinds are coming from wage pressures. So wages are going up. So to the extent that people have jobs, I think the wages are increasing. So they are able to manage in an inflationary environment. But the companies obviously are going to focus on margin pressures. We're also seeing raw material prices going up for companies. But still, nevertheless, the revenue growth has been strong. But going forward, I think the revenue growth might be strong due to growth. I think margins could be under pressure. Now, on the unorganized sector, the MSME, there is still a lot of pain there.
If you like the video, do like, comment, share and subscribe.